Welcome to my YouTube channel. This is Tuesday, the 18th of October, 2022. I would really appreciate during this program that you would hit subscribe, like, and share. And remember, anytime too, you can go to my site, philsgang.com, where it says get started, and you can sign up for 10 days free, where then you can get the stocks in which we are participating in. Okay, so remember now, we had another big rally yesterday of 500 points. But you got to remember, if you look on my chart right here, that rally is inside this downtrend. Now, the big thing you got to remember is when we had the 2018 drop at the end of the last month in 2018, December, right in here, when we had that drop, remember we had a big rally out of there. When we had the 2020 drop, we had another big rally out of there. Now, why were we getting these big rallies after these drops? Because they were doing QE. They were doing printing $150 billion a month, buying treasuries to bring interest rates down to zero. And that's what made these rallies. We don't do that anymore. We can't, because we're fighting inflation. And that's why this rally, and you can see the trend continues to be a downtrend as opposed to these being uptrends. So anytime we're getting these days of 500 points, then it goes down, then it goes back up 500 points, it's meaningless because, again, we're in a severe downtrend. So we're getting what they call snapbacks. We're getting what they call short covering rallies. That's what that is. Now, when the banks went up, remember, they rigged the market to always make sure the banks report first. They do that, as I told you before, okay? Because with the banks going first, they can always shift money from their set aside for bad loans to their bottom line to make their profits look better than they are. And that's why they set them up first. Then they bring in the next group, which is the tech group, big tech. Now, big tech, unlike the S&P or unlike the value stocks, where you have the bank stocks or value stocks where you need real profits, the tech stocks, you don't need profits because those are growth stocks. People buy a tech stock in anticipation the stock's going to go up and they're going to make a lot of money. So as long as they beat the estimate, and they always set their own estimate, so they always beat it by a penny, that then further pushes the market higher. And also the reason why they set the banks up first, because 10 days before banks report, remember, they're not allowed to do stock buybacks, okay? They can't buy their own shares back. But after like Monday, or last week rather, 8 banks reported. 8 banks, boom, 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 boom. And now they can go back and start purchasing their own stocks. And that's what created a lot of the momentum yesterday. So as the banks were rallying yesterday, remember behind those banks, Bank of America and Mellon, was 8 stocks buying their own shares back. So the biggest mistake people are making is they're buying these dips. And the fake business there is buying a dip, you're going to get killed. All right. So again, this market, we don't have a bottom. There's no bottom in yet. To have a bottom in, by the way, you can't keep on doing just 75 basis points. That's not enough. Remember, inflation's only dropped 0.6%. That's it, 0.6%. He's got to go They got to go 6.5% more. Okay, to get back to the Fed's 2% target. Are you kidding me? So also, too, the earnings growth are horrible. This third quarter S&P 500 estimate is about 2.9%. That's awful. The other reason why they're not getting, you can't have a bottom in, okay, is because we have an inverted yield curve. I mean, there's so many reasons. Retail are so bad. The durable goods orders are down. So this is again, remember, this whole rally has been led by now the banks, and now they're going to start bringing the techs in, and because they don't need earnings, all they can do is beat their estimates. That'll push the stocks up even more. So we catch these rallies. and then we'll catch them when they go back down by shorting them. Do you know that the estimate that the folks that have the 401ks, they've lost about 26% because they don't short. Isn't that crazy? They don't allow them to short. And if you don't know how to short, you got to be running around trying to find some hot stock that's going up. The beautiful thing about shorting, you can stay with the same 6 stocks. That's what pros do. That's what I do. I have the same 6 stocks all year. What do I need more than that for? As long as they're good stocks like Intel and Caterpillar and Goldman Sachs, what do I need more than that for? So that's where we stand right now. So we're in the middle of this short covering rally led by the banks. Now we're going to be led again by the tech stocks, and that's why my members purchase the spiders to catch this rally. Now, if you want the stocks that we were trading, as I said, anytime you have in your mind, what's the market going to do? I'm going to tell you right here, okay? And what I'm going to tell you is the market's going to go lower. So, again, if you want to know what stocks we're in to catch the rallies or catch the sell-off, join my membership, okay, Phil's Gang. Check it out. It's free for 10 days anyways, all right? So be patient with this. Just remember, again, look at this chart. Unlike these other rallies out of the downtrend, see, this was a downtrend, this is a downtrend, this is a downtrend. The difference is these rallies had QE. These rallies, no more QE, okay? See you on the charts. Don't forget to sign up for my gang membership for free, 10 days.